Welcome to the podcast, everyone. Today, we're diving deep into the U.S. economy, which has been sending us some seriously mixed signals. We've seen resilient jobs growth, but inflation's been stubbornly creeping along. And now, just when we needed clarity, the referees have basically walked off the field.
That's right. We're talking about the partial federal government shutdown, which began on October 1st, 2025. Our mission today is to unpack exactly what critical economic data is now missing, and, maybe more importantly, how the markets are reacting to this sudden information blackout. The timing is really something, isn't it?
Absolutely. Agencies like the Bureau of Labor Statistics, the BLS, and the Census Bureau, they're key data providers. When they have to delay releases because staff are furloughed, it just leaves policymakers, investors, everyone really, operating in the dark. It's a huge blind spot.
Okay, let's untangle that a bit. What are the really essential reports that are now officially on ice? What's the direct impact?
Well, there are three immediate big ones, reports that are absolutely critical for understanding where the economy stands right now. First, there's the September jobs report from the BLS, which was supposed to be out October 4th. It's our main way to gauge the labor market's health. Is it still hot? Is it cooling? Crucial info.
Exactly. And second, and this one might be the most critical, especially for the Fed, is the September CPI, the Consumer Price Index. That's our benchmark for inflation, originally due October 15th.
Okay, wait. Without that specific CPI number, what does that do to the Federal Reserve? Don't they have other things they look at?
They do, absolutely. But those alternatives, like the PCE index, they're imperfect substitutes. The problem is, without the official CPI, the Fed might lean too heavily on older data or data that isn't quite as forward-looking. It genuinely increases the risk that they either delay making necessary interest rate decisions or, worse, they misjudge the current inflation picture entirely.
So a real risk of policy error then. A significant one.
And the third key report we're losing, looking a bit further out, is the first estimate for Q3 GDP, quarterly gross domestic product. That was scheduled for October 30th. It's the big picture snapshot of overall economic growth.
And this isn't just about numbers on a page, is it?
No, not at all. The White House itself put out an estimate that a week-long shutdown could cost around $15 billion shaved off GDP. That's the estimate for just 1 week. So yes, this has very tangible economic costs. Even while essential services like Social Security payments continue, the data flow is the real casualty here for markets and policy.
Okay, so a multi-billion-dollar hit. How are investors actually reacting? I mean, they hate uncertainty, they hate flying blind. How are they pricing this risk right now, as of today, October 2nd?
It's actually kind of fascinating. On the surface, there's this surprising resilience. The NYSE composite, for example, is holding pretty close to its 52-week high. And that's largely supported by still strong corporate earnings and this ongoing buzz around AI profits in certain sectors. But underneath that, this policy uncertainty is definitely acting as a brake, capping bigger gains. You see volatility ticking up.
Holding near highs, though. Does that mean the market isn't really that worried? Or is the worry just showing up in maybe specific places?
I think it's the second one. It's showing up more in behavior than in the broad index level right now. Look at safe havens. Gold is up, silver is up. They're both on a clear upward trend. That's pretty classic safe haven buying, driven by this policy mess in Washington. And investors are buying insurance.
Okay, so a flight to safety in some corners.
Exactly. And you also see it in sector rotation. Sure, the year-to-date leaders like tech and industrial are still strong, benefiting from AI and infrastructure spending. But now you're seeing more interest in defensive sectors, utilities for instance. Investors are getting nervous, moving away from some of the more cyclical areas like energy or healthcare, which have really lagged this year anyway.
So if the official government data machine is essentially frozen, what are people using instead? What's the best approximation we have to fill this huge measurement gap?
Yeah, we have to turn to private data sources. Things like the ADP payroll report for a hint on jobs, or the ISM surveys for manufacturing and services activity. And they do offer valuable clues, definitely, quick snapshots, directional hints. But they're not the same, not even close, really. They just don't have the comprehensive scope, the rigorous methodology, or frankly, the universal trust that the official federal reports carry. They can give you a sense, but they can't replace the real thing.
And if you zoom out, connect this to the bigger global picture. Well, this domestic data gap just adds another layer of worry onto existing global anxieties. Global growth forecasts were already pointing downwards for, say, 2026 because of trade issues, geopolitical shifts. Now you layer this shutdown on top. It just makes the Federal Reserve's job incredibly difficult for their upcoming October meeting. Their path is really clouded now.
So pulling it all together, what does this mean for you, our listeners? It sounds like the U.S. economy itself might still have some underlying strength, but the tools we use to actually verify and measure that strength, they're temporarily offline.
That's right. And that lack of verification, that data void, it leads directly to more caution among investors. That's why you see money flowing into gold. Even while the broader stock market index might look okay on the surface, the caution is real. Knowledge is always most valuable when you can actually understand it and apply it. And what really stands out here is just how much the risk of a major misjudgment goes up for policymakers, for big investors, when that data isn't there.
Thanks for watching.